Okay, every day we got new news around regulations in China, but let me, instead of commenting on each of those, fast forward and tell you what I think ultimately might be the outcome of all of this. And spoiler alert, I think it might be to the benefit of those companies that are currently selling off. So in this video, I will try to explain what I think lots of Western commentators particularly are missing, because I have reason to believe that some of these regulations set in place are more danger actually to some of the Western companies than to the Chinese. Meanwhile, I'm shaking my head around some news like China is banning new IPOs over the data privacy issues. Talking about stuff like this really doesn't get us to the point. Instead, Chinese officials have actually declared already that they wish that Chinese companies will go ahead and do IPOs, fundraising overseas. Also, they expressed that the VIE structure is actually necessary for it. And so hearing that from Chinese regulators is quite promising there and an important fact. And also this news that China is now screening new IPOs is actually not news at all, because that actually happened right after the Didi IPO disaster, in which the Didi management went forward, basically ignored all of the warnings of the regulators and did an IPO. And so it just makes a lot of sense that now the regulators say that we want to limit whether or not companies can actually just go ahead and list overseas without getting approval by us. That's all that has happened, will not impact the current listed Chinese companies. And so this is just one more of those little pieces that is actually setting the stage for the bigger picture here that I want to talk about in this video, which could actually create an unfair advantage for Chinese tech. See, it's always been like that China is kind of using regulations as an advantage for themselves. I have a personal experience of that, as I was creating a cross-border e-commerce application and selling European goods into China. And I had to comply with and adhere to various Chinese regulations, including, for instance, getting certain licenses, adhering to some internet regulations and so on. And I noticed how painful and how hard it is as a Western company of doing business in China that way. And we see various more examples of this. One is the Chinese firewall, which protects the Jinternet, so the Chinese internet, against what's happening globally overseas. The second one would be around ownership of Chinese companies, which is very limited for foreigners. And so it is exactly a frame set of regulations that has actually led to the fact that China managed to create their own set of tech companies, their own ecosystem behind this Chinese Great Firewall. And yeah, if you compare it to, well, I'm European, I'm German, we don't have our own tech industry. We are kind of owned by the Facebooks and the Googles and so on. And simply due to the fact that we haven't put such regulations in place, that has led to the fact that in Europe we don't have our own tech companies, whereas China has managed to create their own tech companies, not influenced by the West, and quite successful so. Now think twice about it. Are these new rules set in place to now destroy this tech ecosystem? Or could this once again lead to the fact that Chinese companies have an advantage on the ground in China? And if I really ask myself, like, who will be striving and succeeding in this new type of environment, it will be A, companies that are not targeted by such kind of rules, and B, those companies that most quickly can actually comply and adhere to new rules. So to the first point, who will be targeted? So yes, it's every company operating and doing business in mainland China, and that is by the fact not only Alibaba, Tencent and NIO, but of course also companies like Apple and Tesla. So as most of these companies are actually targeted by each of the industry-facing rules, who do you think will be the quickest and the most likely ones to successfully adopt to this new rule set? Will it be the Western companies or the Chinese companies? So let's take Tesla for an example, and that is important to me because I'm a big Tesla shareholder. And there is a chance that intelligent connected vehicles will actually be subject to cybersecurity regulatory developments in the future. And by the way, the report that I'm showing here has been done by some German sinologists, so they can read Chinese regulations and have in-depth understanding. And they point out that there could be costly data protection and monitoring processes necessary even to the extent where a local operating system is required. So Tesla is pretty proud of the fact that they're the first automotive company in China that is actually using this kind of wholly foreign-owned enterprise structure. So that's a certain type of company where it's 100% owned by foreigners and not having a Chinese stake in it. So there's no joint venture like, for instance, Volkswagen, BMW and so on are having in China with their partners. Now this is where it's kind of getting tricky, because these kind of wholly foreign-owned enterprises, this legal structure is not in every case allowed to acquire certain licenses, and so theoretically that is posing a threat to Tesla there, whether or not unknown in the future they might be able to get compliant with new regulations put in place. And that is a danger that I see no one out there talking about, and from my understanding that is a real danger not only to Tesla but many other of those Western companies operating in China with a new rule set in place in China. Will they be able to get compliant as the Chinese companies are, and how, when, with what kind of extent and so on? These are really open question marks around these companies operating in China. Similarly, in healthcare, Apple is likely to have to comply with many of these new rules in China, and they may have to put in new internal processes and data management and approval, oversight, regulations in the company structures in place. For example, in the area of cross-border data transfer, encryption and personal data protection. And China is setting very high standards here. Yesterday we just had news coming out that China is going so far as regulating artificial intelligence. So meaning that they kind of set out rules there, what kind of data the companies can use in order to feed their recommendation algorithms. So for instance, we know with Facebook and Instagram and so on, and our phones that are basically listening to our conversations, right? This is not something new. Sometimes we talk about certain topics and next we see an ad popping up there. And that has of course to do with the fact that these companies can use some of the data coming from third parties and so on. And this kind of stuff might be forbidden in China in the future. Of course, there are companies like Pinduoduo as well as Alibaba who have been heavily relying on such kind of algorithmic recommendation engines and have been really successful by that. And yes, they may face some issues on the business model level and also maybe even on the bottom line of the business. So the danger is real even to such kind of Chinese companies. But the big question is, how will actually those Western companies who are used to operate like that, how will they be able to kind of adopt their services in China? And possibly, as we see China setting such kind of standards, we will see some kind of regulations actually trickling down to other countries as well. So in essence, China might be leapfrogging us here in the West and is putting out one of the most severe and also cleanest privacy data laws out there in China. And kind of pooling their big tech behind it. And the big question is whether or not that is actually to the advantage of those Chinese companies. And I try to see the bigger picture here. As I mentioned before, I think this is likely to be another protectionist move by China. And let's be frank about it. China has used that one in the past in order to build up their economy successfully. And now we see stuff like this, which is most likely to the advantage of the Chinese companies, again, barring foreign competition of being successful in China in that regards. And then also stuff like Tencent is now investing parts of their income in both sectors as well as industries where the Chinese government would like to see new investment happening and where they have a strategic focus in the 5-year plans and so on. So essentially this is a powerful combination between governments setting out new rules and then pooling big tech behind them. And I don't see a similar working together between the government side and the tech side anywhere in the West. And so this leads me to the question whether or not we are kind of missing something here in the interpretation of these new rules. And in fact, it could have the outcome that in a couple of years we will see an economic powerhouse developing here in a certain direction. For example, electric vehicles, sustainable transport, intelligent manufacturing, 5G rollout and stuff like that. And it's coming from this unique conglomerate between industry and the state. So that is possibly very powerful. And I'm wondering whether or not we in the West have actually understood that yet and what will be our reply to it. So that's why I think we need to actually have to monitor the big and macro picture here instead of commenting on all of these new specific regulations coming out. And I'm arguing that this is likely to benefit some of these Chinese companies that are currently selling off because of the news. And I think we're having a blind spot here and kind of missing out on the fact of what this could actually mean to some of our companies going into China and doing business there. Anyways, let me know down in the comments what you think about it. Please smash the like button, that helps to spread the video out there. And then thank you guys for watching and see you in the next one.